Every January, I sit down to ponder the best and worst performers of the S&P 500, the NASDAQ 100, and the Dow Jones Industrial Average, see what went wrong, what went right, whether history will repeat itself in the new year. The goal? To put things in perspective in order to identify the likely winners and losers of 2022. Tonight, I'm going to start with the 10 best and worst performers in the S&P 500. Then later this week, I'll do the same for the NASDAQ and the Dow. Give you a deeper look into any stock that makes multiple top 10 lists. We're going to do the top performers now. We'll circle back to the biggest loser after the break. So let's get to it. The number one performer in the entire S&P 500 last year was Devon Energy, DVN. Best year for energy ever last year. Now, Devon is arguably the best-run oil and gas company. I hope you've heard of it, because even though it began the year by combining with WPX Energy, the latter CEO, Rick Muncrief, took the helm, and he appeared on Mad Money and pretty much laid out everything. I first met Rick when he was running the day-to-day at operations at Continental Resources. He gave us a helicopter tour of that company's back and shale holdings, and I did not throw up, contrary to what many people have said. When we had him on the show last year, he described Devon's new variable dividend policy, which puts his company at the top of the S&P in terms of yield. At the time, it was selling for a little more than half of what it's selling now, and it had already gone up a great deal. Rick's part of a new breed of oil men or oil people, drilling for more crude with less capital, some of that's technology, and then returning a gigantic chunk of change to his shareholders. Even if Devon's stock went up nearly 179% last year, it still sports a gargantuan 7.4% yield based on the latest payout, something Rick predicted when we talked to him on the show. I think the oil and gas stocks could have another strong performance in 2022, and the main reason is that the rest of the industry is really copying the Devon model. DVN, honored to know Rick, incredible that he became the CEO, even though WPX was a much smaller company. Number two is a company I really haven't cared for at all, which is Marathon Oil, MRO. It's up 146%. Now, this one snuck up on everyone because, like Devon, it surprised us with capital discipline. It wasn't known for being capital disciplined. It just wasn't. Marathon paid down $1.4 billion in debt, raised its dividend for the third consecutive quarter in November, and didn't raise its oil drilling budget, even though it's got superior cash flow generation. It even targeted $500 million in stock buybacks in the fourth quarter. Now, given that Marathon set aside $2.5 billion for buybacks going forward, this is a $13 billion company. Well, it should have a very strong year as long as the price of crude stays anywhere near its current level. I think the $16 stock could be an under-the-radar repeat winner.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.